Hey, when you're right, you're right. And guess what? I've been right a lot lately. And of course, this is right every single week. It's the rightest thing you could possibly read all week. Now, let's get into the markets. Look at this S&P 500. Really has gone nowhere now for almost 3 weeks. But look at the purple predictor. The purple predictor has moved from a positive to a negative. And this is making me very nervous. Now, coming up on Monday, today, as you're reading this, I'm having a webinar with my Outlook. So look in your email for a registration. It's absolutely free. But one of the things I'm going to do is go into detail of why I think there's going to be a dip in the market of 3, 4, 5%, probably not 10%, but the first 5% correction in many, many months. So that purple predictor is one of the reasons why I'm now a bit bearish over the near term. Let's take a look at the Dow Jones. It looks fantastic. Now, I want to go back. So I always look at it this way. I've got the Nasdaq on one side, and I've got the Dow Jones on the other, and in between is the S&P. So here, the S&P is going sideways with a negative purple predictor. The Dow Jones is in a clear bull market. The market's telling us we want to be in old school industrial stocks, nothing sexy at all. Let's look at the Nasdaq. The Nasdaq is going down. Do you see what I'm saying? So we want to be in Dow stocks on the long side, but on the short side, we want to be in Nasdaq type stocks, and we really don't want to be in the S&P type stocks right now at all. Seasonality is still on a buy signal. However, I've drawn in a line at 138.50 on the IWM, and if it goes below there, then I'm going to get out of my seasonal buy signal. Now, I need to focus on this a little bit this week because it's now a real thing to consider. You see, the seasonality buy signal that we've been on for, I don't know, 9 months or something like that, what that means is it's not that I buy or sell, but I change the size of my positions. So up until now, I've been risking 2% of my portfolio because we're on a seasonally bullish period. Now, if the market breaks through that red line, I'm going to go back to a 0.5% risk. So I'm going to cut my risk by 75% if we go below 138.50. Now, why we use the seasonal indicator is, of course, our winning trades, all the winning trades we've had for months have been double size. That's double profits that we've been making. We've been crushing everybody in the industry, largely because our seasonality indicator kept us on the long side of the market with double-sized positions. Unbelievable. Okay, now here's another big reason why I'm bearish. Look, here we are at the beginning of August, and everything but the green, and the green line doesn't matter because that's the line that's for a Democrat first elected. That didn't happen. The other 3 lines all show August and September as being negative from this point on. Now, I prefer the blue line because it has the most data and because the price action has actually has been very, very close to this blue line. The red line is all first elected. Okay, fine, that's fine. The black line is a Republican first elected, which is, of course, what we have. I'm not using the black and the red right now because so far the blue definitely has more data, so it's more reliable. But it also has described what's happened in the market better than any other line on the chart. So what does this conclude? We're going to see a dip here in August and into late September. Now, if we use the blue line, that dip will be about 3%. That's not a big deal. I think it's going to be a little bit more than that. Maybe we'll get to 4 or 5% decline. We'll watch it. I'll update you every week, so be sure to come back here every week. The yield curve, still not doing much for us. It's a neutral. Asset allocation, really a neutral. It's just going sideways. Our risk indicator also, they're showing a little bit of more hesitancy. That usually means we're moving more into defensive sectors like utilities and consumer staples, which we are. Global shares are doing better than our shares. Obviously, the Dow shares are doing very, very well, but the global shares are doing pretty well. Emerging market shares are doing even better, and I've been telling you to be in these emerging market shares because with the weakness in the dollar, that really boosts emerging market shares. Now, Greece, I've been long this stock for so long. I'm going to get out now. I think we put in that dip that we had over the last couple of weeks was a bit too large for my taste, and the rally that we've had in the last week has been too weak for my taste. So I think we're putting in a failure top. So I'm going to exit my Greece position. I'm not going to cover it anymore. It won't be in next week's TradeSmith. All right, bonds. Wow. I didn't think we'd be this strong. I thought we'd get up to the top of the gap that we left 3 weeks ago, but look at the purple predictor. The purple predictor is very bullish on the bond market, suggesting much lower interest rates. Our indicators, let's take a look at them. The green line is the 10-year Treasury yield. The most important factor has been the blue line, which is the 10-year Treasury yield in Germany, and that's telling us lower interest rates. But the gold line and the CRB are both going up, suggesting higher rates. So I'm still not looking for any big move in this market. The dollar really crapped out again until Friday. Now look I talked about this the last couple of weeks, but look way down at the bottom of the chart. And I showed this to you, I think last week, maybe the week before. The ADX, we have a technique called the Bishop. And the Bishop says that if the ADX is above 40, and it was above 60, and it turns down by the slightest amount, that's an end of trend indicator. And you can see that it was caused by the very sharp rally on Friday. I now no longer want to be short the dollar and believe that the dollar will have a rally, maybe not a big rally, maybe to 94.50, 95, something like that. But the bear market is now over in the dollar, and we can now expect much different price action going forward. It might just be sideways. I'm not saying it's a bull market. I'm not ready to buy, but I no longer want to sell because the Bishop has given us an end of trend indication. Now, if that's the case, then that's going to hurt gold. And there is a seasonal dip early here in August in gold, but then we should expect gold seasonally to skyrocket. I hope you watched that video, the webinar that I did last Monday. Very important. Go through your emails. There's a link to the replay if you registered. If you didn't register, you'll never know. You'll never know. You got to register for these webinars, even if you're just going to come to the, just watch the replay. Anyway, I presented an extremely bullish case for gold. So we're dipping now, which is fantastic because now we're going to get some entry points into our gold positions that we're loading the boat in over in our fully paid up member section. So please, if you want to get into this thing, please sign up as a fully paid member. Now, the gold indicators were extremely bullish, but you'll notice that they've all dipped a little bit, just a little bit, no big deal, just a little bit. And like I say, I'm pretty excited about that because the dip now gives us some low-risk entry points that we can then load up the boat looking for further bullish gains in the gold market. Now, I don't need to show you this. That's over. What am I doing? See, I'm pitching. All right, oil. I got to tell you, I don't want to have anything to do with oil right now. I think the fundamentals are quite negative. But what's happened is that the Saudis and most of the OPEC members have actually had some discipline, and they're able to keep the price up pretty high. Very unusual circumstance. I always bet against OPEC, but right now that bet has not helped me. All right, everybody, you know the drill here. You really should be signing up, particularly with this massive play we're going to make in the gold market. We've got a lot of operations we're going to be pulling off there. We've already started to buy some gold stocks. If you are a freebie member, you got to sign up to follow what we're going to do. I think you're going to make so much money, it'll pay for TradeSmith for 2 years, whatever, a long time. All right, freebies, we still love having you here. Fully paid up members, hang in there just 1 second. I got a lot of stuff to talk about.